Over 90% of real estate investors and also entrepreneurs are living check to check because they don't understand this one massive concept when it comes down to mastering your money. I know people who are doing seven, eight, nine figures, but still living a crazy lifestyle in terms of how much they have to spend for themselves, how much they're making, and so much more. Let's face it, most real estate investors and even entrepreneurs who do it incorrectly are always cash poor. Almost all of them. Again, my real estate team's done $1.6 billion transactions over the past few years, and I've seen people who are worth nine figures on paper, nine figures on paper, but when it comes to the actual expenses they have for capital that's liquid, not a whole lot. That's because most people never learn this concept of really mastering the finances. Because there's two major entities that you have as a entrepreneur or real estate investor. We have obviously number one is your business. Your business is going to be our biggest asset we have, even bigger in most cases than our real estate portfolios. But then number two that we have, which is also really, really important, is yourself. Now, I will assume that most of you probably don't commingle your funds. At least hopefully you don't. I did it for a long time and it really threw a big wrench in our life and our business and our scalability because of that. Especially if your goal is to one day sell more assets or sell the business, it makes it so much harder to do that. So I'm going to cover the best ways to really manage your finances, how to operate your business in terms of income, and of course also how to really allocate those funds into your life hold. And your life hold has to make sure this happens in terms of your real retirement fund. Most people think that the business makes you rich. And I used to think the same thing, or makes you wealthy. The business makes you rich equals rich. Yourself equals wealthy. Now, of course, if your goal is to one day sell this business and not have it as an active asset, then it does become a wealthy play for you then as well. So again, there are nuances for this. I'm going to cover all this and more for you on this quick video. And again, my name is Jordan Super. My team's at $1.6 billion transactions. I'm one of the top real estate agents in the entire country. And I am so passionate about this topic more than anything else because you can make a lot of money. Like again, $1.6 billion in transactions, I've made lots of income. But at the same time, I had huge burn rates, and massive, overhead, all these things going on. And I wasn't paying myself as properly as I should have been doing back in the day recently. And this really jeopardized a whole lot of stuff for us. So let's hop in to the main ways to think about this. Because all you probably already know, a quick little recap, is the quadrants. The quadrants that Rich Dad Poor Dad made from Robert Kiyosaki is as follows. We have self-employed. We have employed. So W2. We have self-employed. We have business owner. And we have investor. Now, Robert Kiyosaki doesn't really illustrate that deeply. He says the whole goal of this is to go from employed to self-employed to business owner to investor. And you're probably thinking to yourself, how is self-employed and business not the same exact thing? Well, one, self-employed means you're literally doing all the jobs yourself. You're the salesperson, the marketer, you're the cheerleader, you're the finance person, the CFO, CMO, CEO, CTO, you're the COO, you're every single position in the business. So it's just self-employed. Whereas a business owner has an asset, a real asset that works for them whether they're gone or not. I was in Thailand for 5 months this year in 2025 with my wife and my son, and my business was still running. I was still making high income every single month. My clients were being taken care of. I have a legit business, over 100 plus agents across 20 states. I have staff, I have employees, all these things involved. And automations allow me to have a real business as an agent, not just be self-employed. Number two is the holy grail that he says is to be an investor. Now, the whole goal of all of this, honestly, is to always have a business more often than not, and you pour all this money into real estate. So let's face it, you probably already know by now that most often than not, if you're buying real estate, whether that's residential or commercial, and I'll over have a whole breakdown telling you the math behind commercial real estate, why it's so amazing, but even great deals. You're making 3, 5, maybe even 10K a month from those assets, which is great. But at the same time, if you run like a legit business, that's not all your money. I'll break that out more pretty soon. So having a business is what feeds your investments. It feeds you as an investor. And this is when people don't understand that investor is actually yourself. Because investing in real estate is not the same thing as having a real estate business. If you're buying commercial properties, you're buying single family homes, you're buying all these assets, whether that's short-term strategies or long-term strategies, this in itself is your business model. Whereas if you have the investor strategy, the goal is to get to a point where your household, with one day become a family fund even, or a family office, is having capital that this your house alone is kicking off massive dividends that pays you as the founder of this new entity you just created. That's not exactly a business. I know right now it may sound a little bit confusing, so let's break it down even deeper. And we'll do easy math here, make it super, super simple. Number one is your business. And your business, let's say your business makes $100,000 a year. Makes $1 million a year in income. Now, here's the problem that most people face. Some people, especially entrepreneurs who are still starting off more often than not, say, great, I made $1 million this year. That means me, number two, yourself, made $1 million, which is not the case because your business is an asset, it is its own entity. You, the founder and the controller of the company, does not profit $1 million if your business made $1 million. So one, it's accumulating funds, and two, your business will never grow. And I see a lot of entrepreneurs who made 7, 8 plus figures go broke a couple years later because they treated their business income like their income. And whenever markets gets tough, like right now, it's one of the toughest markets we've seen in the past past decade or so in real estate, they have massive, massive losses. This is why this is red. This will normally go down. So instead, what I've learned to do, I've had massive burn rates for our company. They're like, if I don't make enough money every single month, we're out of business. Not only out of business, we're also just out of life. So I have now decided, instead of making $1 million from this, I will pay myself a salary. Let's say your goal is to make 10K a month. Cool. If you made $1 million that year and you pay yourself a salary of 10K, you made $120,000 that year in income. This means about 10% of your capital was poured into here. Now, you can also add in bonuses as well. So I'm going to cover what you should do if your whole business is real estate, because this is the nuances here. Because let's say right now you have an income now of $120,000 a year, thanks to your business making money. Also, it means that your business can now use $800,000+ to then reinvest 880 to reinvest back into the business for more scaling, more ads, more employees, more operations, and so much more, and make this be 2 million, 3 million, 10 million the following years. If you don't do that, that business will cap off and never grow to that level. And your household, you made 120K, but here's the kicker. Our burn rate you want to have should be as low as possible. If we can keep our burn rate so low that if everything goes to hell, you're still fine. You can still make massive, massive actions, have controlled decisions, and so much more. I know a lot of entrepreneurs. I spent over $60,000 for a coaching program a few years ago. Great program. I learned a lot. Kind of oversold to me. That's besides the point. And I knew his mentors. That was, you also probably know them too, the really, really famous entrepreneurs who are worth $1 billion, or at least controlled assets, and other people who did $1 billion acquisition that also went sideways. Point being is these people he learned from told them, and told me as well when I was working with him, is if you make $1 million in your business, you spend all that money back into the business and to yourself and have no money ever, which is the worst thing you can do. That means you make rash decisions, you're short-sighted, and you ask for things, and you operate in a way that will be conducive to your success. So instead, what I like to do now is say, okay, if I make 120K a year, my business made $1 million, my burn rate that I want to have is $60,000 a year, maybe 80, maybe 100K. It's up to you and your preferences, obviously, on what you're looking for. But for me, I want it to be as low as possible. Instead of life, I drive a Porsche, I have a nice house, I in a nice neighborhood, and so much more. But I keep my overhead as low as possible. So this allows me now to say, great, this 120K I have of salary pays me 60K. Well, let me have a 60K burn rate. So let's do burn rate over here. And that means that my household, still me, has $60,000 left over to then make more plays and have more true wealth. Because I'm assuming right now, if you're watching this, that your business is probably not real estate. Now, most of you are probably investors, because this is the whole channel is about, either doing commercial real estate or residential real estate. But I'm assuming that most of you might have businesses that are in tech or in AI or in marketing or in, you name it, lawn services, old boring businesses. Whatever it might be, your business makes you a lot of income and you want to diversify yourself and have wealth being built, so you buy real estate as well. Now, the business itself should not be buying real estate. The business be buying, if it is buying real estate, be okay, we need to expand, let's buy this office space to expand our business. Otherwise, it should not be buying real estate for you unless it actually does something for the business itself, not just like, oh, I'm going to make more wealth. But this is not what business is meant for. If you want to sell it, it's going to be really hard to sell because you have all these assets. And as a commercial agent myself, when I'm looking at businesses and commercial properties, I have to see how much is the business worth, how much is the real estate worth, and who wants this real estate, who wants this business. Then it's even more murky. I'm commingling two different things together that should not be commingled in the first place. So this is our business side of things. If my free cash flow, so my net cash flow of my personal life is $60,000, I can now use this capital to then invest in real estate. Will that be commercial real estate? Pretty small, huh? I can invest in commercial real estate or real estate as a whole. And this is what builds your wealth. if you buy an asset, and let's say we find a storage unit, we found one a couple of weeks ago from a client, is $600,000 for this asset. It'll probably kick out $2 to $3K a month in net free cash flow once he stabilizes it. Now, my lender we work with also has amazing rates, but also lets us do a reverse mortgage almost, which gives us working capital. And that working capital allows us to get back our down payment. So let's say that we invested 10% down for this property, an SBA loan is $60K. So all the capital we had from our household is now gone. Granted, I would not do that. I would save some money in your bank. Again, savings is important. So let's say it's $40,000 that you have down, and you have another 40K or 20K from the previous year, or from somebody else who's a partner of yours. Well, actually, probably from your family, so your wife or something like that, keep it in the family. So 40K from you that year, 20K the year prior, or you do this, you buy the property, 60K down, but you know the working capital you're going to get back of 100K can then reimburse that 20K down you spent on that, and then you have 20K in bank. So this allows you to really have a really powerful way to make sure you have money left over, but just to buy assets. Now, this asset, though, that you bought, let's say it kicks back 2K, let's be conservative here, it's $24,000 a year now in net free cash flow. After expenses, after everything's said and done, $24,000 net free cash flow, meaning the following year, if your business stayed the same and made $1 million, you got paid $120, you then made $144, and now you have $84,000 left over the next year and do this again. Plus, you can still leverage the equity of this new asset the following year as well, with more properties that have more control of your household, making massive amounts of money. Does this make sense? Does it make sense down below? Make sure you smash that like button, tag your friends, share this video. Have more coming up soon about how to do this as a real estate investor. A little bit different as those whose main business is real estate. Obviously, it kind of blends together. But the business owner, this should be like the goal you have for yourself. That way, you always have some kind of wealth being built the whole way. And Lord forbid, if the business and the market changes overnight, and this business goes from $1 million to $100,000 a year, you could have an asset that pays you every single year and protects you. Again, you want to have passive income, as passive as it can be. Obviously, as you know, I don't believe in passive income because even storage units or automated, all these things, there's still stuff you gotta do. There's never a 100% passive income source, other than investing like a dividend and investing like those kind of index funds that is totally passive, low returns, but totally passive, super safe, and more of that pretty soon too. This is how we do it. Now, obviously, as well, when you think about this too, if you make $1 million, like I'm not saying like live on bare minimums. Like if you want to have bonuses, do that. And honestly, the book I think I have in here called Profit First, which is also really good to read that book as well. Profit First, I don't think I have it in the office. But that book breaks down as well how to really pay yourself as an entrepreneur. People get it wrong all the time. I know people who have made 7-8 figures go broke the next year again because they don't do it correctly. And I also kind of preach that I didn't go broke, but like we had big setbacks because I was not running my business this way, and now I am. I'm so big on thinking long term. I have goals for 50 years from now. I'm becoming a billionaire through real estate investing and developing cities and stuff like that. And I know if I do this for the long term, getting to that point becomes easier. Kind of I'll have way more bandwidth, way more control of my life, and won't be flustered making wrong decisions and feeling rushed. So this is how I structure it though as a business owner, the two separate entities. Now, if you are an investor, we'll do the same exact math here, $1 million, but the business is real estate. This is commercial real estate or residential real estate, doesn't matter, but real estate as a whole, and it makes $1 million a year, which is a lot of money to make in real estate. It means that it's probably not just passive income. Probably not just dividends from the rentals you have. It's probably gonna be like some active play as well. And I'm gonna break down 2 ways to do this. One would be active, and one would be passive. So let's see. Do active first. So active business is for real estate. It's gonna be flipping homes. It's gonna be wholesaling. Again, I have a whole video about wholesaling as well. Flipping to believe on this channel too for you. But these are not investing. If you're flipping homes, if you are doing Burr method is to sell them after a couple of years, all different strategies of buying homes below market value and then selling them again, a wholesaling where you're buying an asset that's below market value with light cosmetic upgrades and selling them. All those things are not investing. Those are all just a business that does real estate and allows you to then kick off funds. Now, it should be the same exact thought process with this. If my business makes me $1 million a year and I'm flipping homes or wholesaling, I'm gonna follow the same exact trend. Pay myself $120,000. I'm then going to have this DK burn rate. Burn rate down below. And then I have $7 left over of profit. And this profit allows me then to either do one or two things. This would be the same exact equation for those who are active and those who are passive versus long-term strategies. If you're active, I think you should then pull this money into more real estate. Who would have guessed? Pull it back into more real estate. And when you do more real estate, I would diversify a little bit. Because let's say that right now, single family homes are doing amazing, but commercial real estate is doing poorly. If your whole portfolio is commercial real estate, that can hurt you. If your whole portfolio is opposite, that can also hurt you. I think it's really strong to have both asset classes because real estate has 5 main asset classes. Again, up above, the whole video breaks down the major assets in commercial real estate and my favorite top 5, the top 15, 20 subcategories behind them. But if you have all commercial real estate, then you should have some single family homes or some storage units or some RV parks or some other asset that would not tank when this one tanks as well. So normally one does bad and one does good too. So that's really go. But okay, great. My more real estate that is for passive income within reason. The whole goal of this is actually is cash flow. Because you will know in real estate, there are people who have 10, 20, 50 deals going on at one single time for a year. And then if stuff gets rocky, they can't pay themselves anymore. And their salary goes to zero because their income is now at zero as well. Which is why it's so important to have some kind of capital you have in the backside that pays you dividends. Like for me, my real estate team of 100 agents is like my passive income. I make money from them every single month. Also help them too do more production. But overall, like that is my current passive income stream. So we do more investing in ourselves to even higher incomes. But for now, you want to have some kind of passive income stream that allows you to then have this huge amount of money or profit from your salary. Let's take the hit, you still have to go on. But then let's do the same exact math. And this is just easy to change. If you are now a passive investor and you make $1 million a year to cash flow, one, massive congrats to you. You need more assets that are either commercial, residential, down below. Link in the description. Have a call with me. I just saved my clients over $250,000 yesterday on a 196 storage unit facility. So big savings for them. This assets that kicks back so much profit for them. It's about 9% cap rate. And once it stabilized, probably 12 to 13% cap rate before adding in more units even. Just adding extra bonuses and fixing the rent rates and so forth. So if you need help with anything real estate, whether this level or below in between, we can help you out. It's the best deals in all 50 states and even different countries too. So we have you back in that regard from the top agents in the whole entire country. We can help you there. Down below in the description, have a call from me and my team personally, no obligations, no strings attached. This is to see if we can work together and make it a win for you. But you make $1 million a year in your business through passive income streams, meaning that you and your investors, you and your family office that you work with, are probably going to be doing lots of capital, like massive capital. Probably at least $100 million in real estate portfolio that you have, give or take, or at least $15 million, at least minimum you have here. You pay for the salary still. So your salary is still $125, capital $60K, and you $60K profit. Now what changes though is that you should not actually, in my mind, there are two options here. You can then diversify from the business, because in the business, more often than not, it's not just you. At this level, especially making $1 million a year, it's probably you and a cohort of your friends and your partners, private money, and so forth. It's not just going to be you by yourself at this level. At that point, it means here, you can either invest in more real estate, which is one option, or what I think might actually be a safer option, because you have so much real estate, and this is going to sound crazy to hear from me as a real estate agent, is maybe since you have so much real estate, maybe you don't want to diversify, pull the $600 back into the business, which you can. At this point, why you can do that, and then talk to your partners. If it's just you by yourself, then totally do that. So if you're already doing it, then do more of it. Because if it's just run by yourself, it's fine to think long term. But one day, will you have partners in this business? If that is the case, then you should not do that. Because the goal is to have this be just you forever, and your families, totally fine. But one day, I'm going to have partners, I'm going to expand, I'm going to hire a CEO for the company, all these different things with operations. Then you should not do that. You should invest in more real estate. Because you want to make sure you yourself, your household, number two over here, has that passive income, has that wealth being built for you, for your family, for years to come, whether this business tanks or not. But down below, if you are not doing that strategy, because you never have partners, totally fine. What you do instead is then go over here and say, I'm going to buy index or funds. And this makes a place, which sounds super boring. And it sounds crazy to hear from an agent saying, if you already have a lot of real estate, buy more real estate. I'm saying the opposite. If you already have a lot of real estate, passive income, then maybe you should diversify. Like, hey, I'm going to buy me some index funds. I'm going to buy me some S&P stocks that are dividends that pay me every single month. I'm going to follow what Warren Buffett does and buy his stocks, or buy politician stocks that it's going to be high income for them because they have insider knowledge within reason. So that's what I would do instead, honestly, like play for the long term. And then, of course, if you make $1 million a year with any of your businesses, obviously pay yourself bonuses. Read profit first, pay yourself bonuses, know where you're coming from. But when you do this, it becomes so much easier to think long term, to have time to make content, to help more people, to make bigger plays, because you know that you have the time to do all you want to do and not be stressed about it. Like for me, having a lot of money in my bank account feels great. Having a low overhead but still high quality life feels great. Having a business that makes a lot of money that can then pull back into my business feels great. And I've done the opposite. When I use this as my money, that is great. Super stressful, not fun. I made poor decisions. I got super burnt out. And now it's super holistic, super easy to do things. So this is my suggestion to you. Obviously, talk to your CPA, talk to your advisor team. Obviously, make your own play. You want to send them this video, see what they think about it. But I am so passionate about finances and real estate because I come from nothing. I was homeless as a kid from 12 to 18, sleeping on frozen benches and mostly friends' couches, luckily. But I have all the cards stacked against me. I had no food most nights, a lot of nights growing up. And now I'm one of the most successful agents in all America and do massive things for my clients. This is why I'm so big on this. I have read hundreds, if not thousands, of books. I've spent tens of thousands of dollars on coaches and mentors just for finances. Talked to my CPA who saved me my taxes. So this year we paid $0 in taxes. $0 in taxes. So like when you think about $1 million a year, you think, oh, for taxes, I made $500,000 a year. Not correct. It's the right kind of CPA that we have. I pay nothing in taxes. So above Brazil, you see a whole video that breaks down taxes for you, how to save money on taxes, so much more. It's really good with this video. Down below, a whole playlist that breaks down all things investing for commercial, residential. But I hope you like this video. Make sure to subscribe down below. This helps me make you more content. And also know that I'm helping you in the right ways about real estate and investing and finances and becoming your best self, obviously. But thanks for being here. Share this video, subscribe, watch these over here, and I will see you at the top. Thanks for being here. Have the best day yet.